Forecasting Australia's exchange rate using trade weighted index, presented by Group 50 Trendspotters. The aim of this research is to find whether Australia's exchange rate can withstand the coronavirus pandemic by performing time series analysis on its respective trade weighted index. What is trade weighted index and why are we using it in this analysis? Well, trade weighted index is a measure used to find the effective value of an exchange rate against a basket of currencies. It provides a broader measure of general trends in a currency. Trade weighted index is often used as one of the indicator of Australia's international competitiveness. It can measure whether a currency is appreciating or depreciating on average relative to its trading partners. It is often used to gauge the value of Australian dollar when bilateral exchange rates exhibit diverging trends. Therefore, we use trade weighted index for forecasting Australia's exchange rate in our upcoming analysis. To aid our analysis, we have extracted the monthly trade weighted index of Australian dollar data from Reserve Bank of Australia starting from January 2010 till April 2020. Based on the data, we have plotted this time series plots of exchange rate of Australian dollar with respective to its trade weighted index starting from year 2010 till 2020. Based on the data, we could see that the trend line indicates downward trends, implying that the exchange rate has decreased over the years. There is no clear indication of seasonality, but there are implications of changing variances throughout the series. There are few hanging observations which indicates high correlations. The correlation value that we have calculated from the trend is 0.96, which indicates a really high correlation. We will be using stochastic trend model as the slope of the trend changes over the time. After detrending and normalizing the data, we have applied ACF, PACF, EACF and BIC table to identify a set of candidate models for our exchange rate data. Based on EACF, we can find three ARIMA models such as ARIMA 111, ARIMA 112 and ARIMA 212. Based on BIC table, we have found AR6, MA3 and ARIMA 613 as candidate models. And based on ACF and PACF, we have found ARIMA 011 as only ACF has highest lag while PACF doesn't have any maximum lag. Therefore, based on all three, we have found this set of models such as ARIMA 011, ARIMA 111, ARIMA 112, ARIMA 212 and ARIMA 613. So based on parameter estimation using maximum likelihood and conditional sum of squares methods, we have found ARIMA 212 model as the most significant model with all coefficients as significant. After checking for overfitting, we have done residual analysis using ARIMA 212. Using the generated image, we can observe the histogram is normally distributed. ACF and PACF do not have any significant lags. The patterns in ACF and PCF slightly indicates white noise behavior. The QQ plot shows normal distribution and Sharpe-Wilk test confirms the same. The p-values are greater than 0.05 in junk box plots. Therefore, 212 model can successfully deal with serial correlation. Hence, we will be using model 212 for our forecasting as well. Using ARIMA 212, we have forecasted exchange rate of Australian dollar using trade weighted index for the next 10 months. Uh, from which we can see that although the trade weighted index has dropped during the first quarter of 2020 due to the pandemic, the recent developments in April indicates a moderate forecast for the next 10 months. Hence, we can conclude that Australia's exchange rate can withstand the coronavirus pandemic if the existing trade measures were in practice.